chart is suggesting a gain of about 70 points, and this ties in with the strength that we're seeing across the Asian market, where Kospi is up 1%, Hang Seng has a gain of 1.3%, the Chinese market's Shanghai index is up nearly 1%, while Straits, the Singapore market, is up 1.7%. So there's strength all over the region this morning. Dipan Mehta, director at Elixir Equities, is with us on the show now. Dipan, any stock purchases that you've done this week?
Good morning, Bima, and thank you for having me on your show. No, absolutely not. Actually, as I said earlier, I'm on a holiday, and I think this is a good time to take some time off from the market, because the way the stocks are, the valuation with which they are trading, I think anything you buy may turn out to be a mistake a few weeks or months down the line. We are anticipating a correction in the new year, maybe not a deep one, but at least time-wise correction is something which should be expected. And my sense is that when the earnings season starts, that's when a few of the disappointments will come in, and you could have some stock-specific volatility on account of slightly below expected numbers for a few companies. And that may provide a good entry opportunity, but at these elevated levels, it's best to just stay in cash.
Okay. Dipan, hi. Glad that you can take some time off and be away and simply perhaps, watch the market and your portfolio rise higher. That's what's been happening. But, I'm not getting immediately into stocks, but a more general question. What we've seen in the last couple of days is a gush of FII money coming in, the strongest in the calendar year, actually. So if, A, do you think this perhaps could continue in January as we step into the new year? And B, if it does, then does buying private sector banks, does that become pretty much a no-brainer trade then?
Good morning, Surabhi. You're absolutely right that we are just about seeing the pickup of a risk-on trade globally. And unless there is something negative in the global market, maybe a geopolitical event or some macro factor, I think this will only gather momentum. And the large caps are the ones which will be targeted by the FIs because they have the liquidity and they want to deploy large sums of money. Then these are easy pickings. Also, a lot of money is coming into exchange-traded funds, which typically go and buy index stocks based on MSCI weightages or Nifty weightage. And from that point of view, also the likes of Reliance, HDFC Bank, Kotak Bank, Axis will be in the reckoning. You could even add large cap IT to that list. And my sense is that IT will be amongst the first few companies to report numbers. And although the financials may not be, may not be that great, it may be flat, slightly lower. But hopefully the management commentary and guidances may be positive, and that certainly can improve the sentiment over there. These stocks have underperformed and are to an extent under-owned as well on the trading side. So they could surprise us in the new year.
Okay, no, got that. Dipan, listen to this next soundbite. This is from, Mr. Gurdeep Singh, who's the chairman and managing director of NTPC. By the way, the stock has done very well, right? It's a steady, no volatility kind of name, which is consistently moved up and back to earlier highs. So the large entities on that side as well. Dipan, your thoughts on names like NTPC and power utilities, basically?
Yeah, Prashant, actually, my view on power on PSUs is not that great, but NTPC is one stock which we and our clients have bought, and it's done really very well. I just bought it because it was extremely cheap at that point of time, and it is just now as well giving a good dividend yield. But I think the way they are scaling up the business is fantastic. Overall efficiency levels have improved for NTPC in terms of plant load factor, and their foray into renewables may improve the price to earnings ratio and allay some of the fears around ESG investing. And more becoming very clear that both need to coexist. So from that point of view, NTPC has an opportunity to increase on the non-renewable side as well. So very positive on the stock. Demand for power continues to improve on a secular basis, and NTPC is going to be the biggest beneficiary.